Welcome back to Investing Talk podcast. Today, we're plunging into a question that's likely on many of your minds, especially if you're tracking the rapidly evolving world of disruptive technologies. Is now a good time to buy into WeRide? We've pulled together a fascinating stack of sources for this deep dive, all laser-focused on this particular autonomous driving company. Our mission is really to cut through the industry buzz, sift through the data and extract the most important insights so you can truly understand the full picture. We're talking the groundbreaking potential, the undeniable challenges, and the downright fascinating nuances. We want you to walk away feeling genuinely well-informed.
It's an incredibly compelling topic.
Yeah.
And autonomous driving isn't just a sector with immense future potential. It's really a foundational shift in how we think about transportation, isn't it? And what's particularly intriguing about WeRide, as our sources reveal, is that it presents this classic, almost archetypal case of balancing, high growth prospects with significant immediate financial and operational challenges. It's like walking a tightrope between innovation and commercial viability.
That's a perfect way to frame it. Okay, so let's unpack this tension. We'll be looking at everything from WeRide's financial health, its place in the competitive landscape, market sentiment, and of course, the big picture risks that come with pioneering such a transformative technology. Let's start by digging into the very core, WeRide's financial landscape.
Unpacking the fundamentals WeRide's financial landscape.
Okay, so our sources give us some initial glimpses into WeRide's financials, and what jumps out immediately is the revenue story. From 2023 to 2024, revenue growth has been, well, surprisingly tepid. It actually showed a recent decrease, 10.13%. But then you look at the future projections, and they tell this dramatically different, almost explosive story. It's a real head-scratcher.
You're right. The divergence is precisely where the core challenge, and I guess the opportunity, lie. How do we reconcile a recent dip in revenue with projections indicating an incredibly strong growth rate? We're talking 90% per annum predicted. This isn't just a simple growth now, profit later scenario. It feels more like a bet on a fundamental reacceleration. The key insight here, I think, is that the sources are signaling a potential inflection point. A moment where WeRide might be transitioning from that early stage R&D phase, burning cash, to an early stage commercialization phase, actually starting to scale its revenue. Ah, okay. So moving from developing the tech to actually selling it. Exactly. And that's a crucial distinction, right? It separates companies that fizzle out from those that truly take off. But it also carries immense risk if that inflection point doesn't materialize as projected. You're basically investing in a future vision, not the current performance.
Makes sense. And when it comes to profitability, it's a similar mixed bag, maybe even more stark. The company is currently unprofitable, and the significant losses actually increased by a concerning 27% in 2024. That's a pretty substantial jump in the red.
Precisely. And those increasing losses, they aren't just figures on a spreadsheet. They represent the enormous capital expenditure required to innovate and scale in this kind of bleeding edge industry. The absence of net income, no positive free cash flow. These point to clear financial challenges right now. I mean, these are the kinds of numbers that would definitely alarm a traditional value investor, someone focused on current earnings and stability.
Right. They'd likely run a mile.
Probably.
Yeah.
However, the sources also suggest that despite remaining unprofitable in the short term, WeRide is expected to see significant earnings growth way down the line. It's that classic growth now, profit much later play. It just requires a specific kind of investor patience. You're essentially betting on the eventual maturation of the technology and its widespread adoption, understanding that the path there is, well, really costly.
So it's a long game, no doubt about it. But what about their positioning within this massive autonomous driving sector? What makes WeRide stand out, if anything?
That's a crucial question, because this isn't a market where everyone's going to win. WeRide's strong presence isn't just in general mobility concepts. The sources really highlight their significant strides in commercializing robotaxis in several major cities, and importantly, their deeper integration into logistics. Think freight and last-mile delivery.
Okay, so not just people movers, but also moving goods.
Exactly. This dual-pronged approach is vital because it diversifies their market exposure. It reduces reliance on just one single segment, like, say, private autonomous vehicles, which might be slower to mature. It suggests they're not just building impressive tech in a lab, but actively finding specific, high-value applications that could accelerate revenue generation sooner rather than later. This positions them potentially quite uniquely against maybe more singularly focused competitors who might only target long-haul trucking or individual passenger cars. They're casting a wider net.
Which, assuming they can execute.
Assuming they execute, yes. That's the key. It could lead to more robust long-term potential.
Diving into valuation and technical signals.
Okay, so if the company isn't profitable yet, and in fact has these increasing losses, how do we even begin to put a value on it? Traditional metrics like a price to earnings, the PE ratio, they aren't really applicable here, are they? Because, well, there are no earnings.
That's absolutely correct. WeRide lacks a trailing PE ratio, obviously, and even the forward valuations are negative, which directly reflects its current non-profitability. Our sources suggest a price to sales, or PS ratio, would be more relevant for a growth company like this. It values the company based on its revenue, not profit, but even that specific number isn't provided in the data we have. So this means you can't easily compare it using those standard benchmarks. It forces you to look at more unconventional and often, frankly, more speculative valuation methods.
Right. So it's definitely not a standard valuation case. That makes it tricky for a lot of investors. But what does the market think about WeRide's future? Are there any hints about potential upside from, say, professional analysts who follow the company?
Well, given the lack of profitability, methods like discounted cash flow, or DCF, aren't really applicable either in the traditional sense. You're not discounting current positive cash flows or even near-term ones. Instead, analysts are often using models based on things like future market share, the total addressable market size, which is huge for autonomy, and projected technological breakthroughs.
Educated guesses, essentially.
Educated guesses, yes, but based on deep industry knowledge.
Yeah.
And here's where it gets truly intriguing. Despite all the current red ink, analyst targets do suggest a significant potential upside. This isn't just blind optimism, it indicates a professional belief in that future growth we talked about. They're projecting based on the company's long-term potential in what could be a multi-trillion-dollar industry, even if the road there is, bumpy.
Okay. Now let's switch gears a bit and look at what the stock itself has been doing. Technical analysis can sometimes give us clues about broader investor sentiment and price movement. And WeRide's stock price has been, to put it mildly, pretty volatile.
Oh, indeed. The recent trading ranges you mentioned, $7.90 to $8.24, that seems relatively narrow on the surface, but it just doesn't tell the whole story at all. The stock's 52-week range is absolutely staggering, $6.03 all the way up to $44. I mean, holding a stock that moves like that, it would test the nerves of even the most seasoned investor, wouldn't it?
Oh, absolutely. It's like riding a roller coaster blindfolded, as you said.
Exactly. This kind of extreme swing really highlights the high-risk, high-reward nature of this particular investment. You're not just seeing typical market fluctuations, you're seeing these dramatic shifts. It means significant gains or, unfortunately, losses are possible in relatively short periods, and often these moves are driven more by sentiment shifts or news flow rather than just the underlying fundamentals changing day to day.
That's a huge swing. For someone just looking at that chart, it kind of screams danger. So what do the general trends suggest right now after such a dramatic drop from those highs?
Well, without having granular data on momentum indicators like RSI, the relative strength index, which tells us if a stock is maybe overbought or oversold, or MCD, which signals trend changes, our view on the short-term price action is somewhat limited.
Right, we don't have the specifics.
We don't. However, what we can say is that the overall trend, just looking from its highs down to where it is now, suggests a pretty bearish short-term outlook. The price has come down considerably, implying a loss of that near-term momentum. But importantly, the sources also indicate potential for a long-term recovery. It's a stock that has seen substantial price drops, sure, but it still holds that long-term promise for investors who truly see that future potential unlocking maybe, a decade down the line.
So short-term pain for potential long-term gain.
That's the classic framing for these kinds of stocks, yes.
News, catalysts, and risk factors.
Okay, so beyond the raw numbers and the technical charts, what's been driving the conversation around WeRide? What's the overall market sentiment like, and, where's the buzz?
Well, recent attention definitely focuses on WeRide's potential for future growth in the autonomous driving sector. It's very much a forward-looking conversation. It emphasizes the promise of the technology rather than the immediate profitability or lack thereof. And crucially, analysts who, often have deeper access to company projections and industry insights, they maintain a buy rating overall.
That's significant.
It is. It reflects a level of professional optimism about the company's trajectory and its ability to capture a significant piece of this future autonomous market. Now, while social media buzz isn't specifically detailed in our sources, it's highly likely it's generally positive. Just given the excitement and frankly, the speculative fervor around the whole autonomous vehicle space. People are inherently interested in what the future of transport looks like.
Right, it captures the imagination. So if that's the sentiment, what are the upcoming events or maybe breakthroughs that could really shake things up for the stock? We're always looking for those potential catalysts, right? Things that could send a volatile stock like this in a new direction.
Yeah, definitely. There are a few key ones to watch. First, the next earnings report. It's slated for August 25, 2025, according to our sources. That's
Yeah.
always a major event. For a company like WeRide, it's not just about revenue figures, but maybe more about progress on key milestones. Things like how many miles have been driven autonomously, any new pilot programs launched, updates on their technology safety record.
Qualitative progress, not just quantitative.
Exactly. Then, continuous advancements in their actual autonomous driving technology and strategic product launches could definitely serve as catalysts. Imagine a breakthrough announcement about L4 or L5 autonomy, or maybe a major new partnership with a global logistics firm, or perhaps the expansion of their robo-taxi service into a big, new, densely populated city. Any of those could fundamentally alter investor perception pretty quickly.
And regulation.
Absolutely. Regulatory events. Changes in regulations regarding autonomous vehicles could significantly influence the stock, either positively or negatively. A clear, supportive regulatory framework across key markets could really accelerate deployment. On the flip side, unexpected hurdles, delays, or patchwork rules could slow things down dramatically. It's this dynamic interplay between the tech development itself and the policy environment surrounding it.
Makes sense. Speaking of positive or negative, let's talk about the downside. Because with such high potential, there almost always comes equally high risk, right? What are the biggest headwinds WeRide faces, according to our sources?
Absolutely, and our sources are quite explicit about these risks. We can kind of break them down into a few categories. First, there are stock-specific risks. That includes the high volatility we just talked about, the possibility of dramatic price swings that could lead to significant losses, especially for investors with shorter time horizons.
Definitely need a strong stomach.
You do. Then there's the current lack of profitability. That means the company relies heavily on external funding or, successful future commercialization just to sustain itself. And a major one is its dependency on regulatory support. If regulations don't evolve in their favor, or if their technology faces unexpected hurdles in getting approvals, it could severely impact their ability to actually generate revenue.
Okay, so company-specific risks are clear. What about the sector?
Right. Beyond WeRide itself, there are sector-specific risks. Primarily, intense competition. The autonomous driving space is incredibly crowded. This isn't a winner-take-all market yet, and you have many players from established automotive giants pouring billions in to other well-funded tech startups, all vying for market share. There are also those broader regulatory challenges across different countries and even states, creating a complex patchwork of rules that can be difficult and costly to navigate.
And the wider economy.
And finally, yes, macroeconomic risks. Things like a significant economic downturn could really impact overall investment in emerging technologies like autonomous driving. If the global economy falters, venture capital might dry up, or consumer spending on new, expensive tech might slow down. That directly affects companies like WeRide. It's a landscape just fraught with intricate, often unpredictable variables.
Rating and recommendations.
No.
So, what does this all mean?
Okay. After all that deep analysis, the financials, the market perception, the opportunities, and those very real risks, how do our sources rate WeRide overall? What's the bottom line for our listener considering this company?
Well, the overall rating provided in the sources is a 6 out of 10, which is interesting. It's not a screaming buy, clearly, but it's certainly not a strong sell either. It suggests, I think, a cautious optimism, that while there are compelling reasons to consider it, the risks are significant enough to warrant very careful consideration and probably a specific kind of investment profile. It indicates the potential is definitely there, but it's far from a guaranteed home run.
All right, a 6 out of 10.
Yeah.
Kind of sits on the fence a bit, but leans positive. And if someone were considering investing, given all this volatility and the growth now, profit later scenario, what's the recommended entry point, according to our sources? And crucially, for how long should they be prepared to hold it?
Yeah, good questions. For long-term investors, and the emphasis is really on long-term here, considering the substantial volatility we've discussed, a range of about $6 to $8 could be seen as an attractive potential entry price zone. The sources are absolutely clear on this point. WeRide is much more suitable for long-term investors, primarily because of its huge growth potential, but balanced against its current unprofitability and those inherent risks.
So definitely not a quick flip.
Unequivocally not a short-term trade. You shouldn't go into this expecting quick profits. It's about being patient, potentially for years, maybe even, a decade, as the technology matures and finds its commercial footing. It's really a conviction play on the future of autonomy.
Got it. And for those investors who like clear strategies, maybe to manage that risk or lock in gains if things go well, are there any suggested stop-loss or take-profit guidelines provided in our sources?
Yes, there are, which is helpful. A suggested stop loss is mentioned around $5.50. This is a critical, pragmatic approach to managing risk, right? It ensures you don't take an outsized hit if things go south unexpectedly, or if that long-term vision takes much, much longer to materialize than anticipated.
Limits the potential damage.
Exactly. And for taking profit, the sources suggest considering exiting around $20. This aligns generally with some analyst price targets we discussed earlier, so it gives you a clear potential upside target based on expert projections, allowing you to lock in significant gains if the company performs as hoped and hits those crucial milestones down the road. It sort of balances the ambition with a defined exit strategy.
Okay, so we've really unpacked WeRide from, well, pretty much every angle. What does this all mean at the end of the day? How do we sum up this complex picture for our listener?
Look, WeRide certainly offers significant growth potential. It's positioned right at the forefront of a major technological shift, no doubt about it. And it's but it definitely carries substantial risks. These come from its current financial situation, the fierce competition, and that extremely high volatility we keep mentioning. It's fundamentally for long-term investors who can really tolerate those risks. People who truly believe in the long-term vision of autonomous driving and who understand that patience, resilience, and frankly, a high tolerance for uncertainty will be absolutely key. It's one of those companies where the investment is much less about today's numbers and far more about tomorrow's world.
That was a truly deep dive into WeRide, hopefully giving you a comprehensive look at what's really driving its stock, the exciting opportunities, and the very real risks that come with pioneering a whole new industry.
Yeah, and understanding these different facets, from the nuanced financial figures to the evolving market sentiment and those potential future catalysts, it's just crucial for making informed decisions. Even if the ultimate decision is simply to wait and watch, or maybe just monitor the sector for broader trends before jumping in.
Exactly. And that's our goal here on the deep dive, to arm you with the specific actionable insights that help you navigate these complex topics, cutting through the noise so you can feel truly informed. So for you, our listener, as you consider WeRide and maybe other high-growth, high-risk investments like it, here's a thought to mull over, perhaps. How do you personally weigh the potential for a transformative, maybe distant future against the immediate financial realities and the inherent volatility of these pioneering companies? Is your bet primarily on the technology itself, on the market's eventual adoption, or is it really just about the timing, trying to figure out when all these complex pieces might finally fall into place? Thank you for joining us for this deep dive. Until next time, keep digging for those insights.